title of this might be a little strong. Accountants don't be the reason that your startups fail. Um, I can actually think of some examples around this, particularly helping clients build capital raise models that are too ambitious. Um, so be super duper careful on that side. Sometimes clients want us to help build these forward-looking models that are nobody knows the future, um, and so just be very very careful and conservative. Oftentimes, business owners are very ambitious in what they think is going to happen. We saw many, and we will see many in the cannabis space fail because they're undercapitalized. So this is an important point. If you're starting a farm or a chemical manufacturer, food producer, dispensary chain, you're going to go through millions of dollars of capital. And if you build a financial deck that goes out and raises, say, 3 million, and it turns out you need 10 million, you're going to be behind the eight ball. I know I can think of at least two examples here in Oregon where they raised millions of dollars, but not enough. So they were constantly going back for more money. And a lot of times their decks were built on these theoretical prices that they were going to get per pound of pot, and those prices were going to always be good and always get better, as well as how much pot they were going to produce, and nothing ever went wrong, and there weren't ever mold in their crops or whatever it was. And so very ambitious production schedules tied with ambitious pricing schedules can lead to disaster later on if you don't raise enough money. So let's just jump right into this. So these are some of the challenges facing cannabis CBD hemp startups. We want to just make sure we're doing everything we can as accountants to help them, not hurt them. So first off and foremost, we got to be educated. We need tools, skills, work papers, knowledge, community to help serve these people right. Our program, Dope CFO, has all of that. I'll tell a little more bit about that later. We're also going to put in our little here in a few minutes our keys to raising capital in cannabis, hemp, and CBD download. So that will be available as well. So first and foremost, if you're not an attorney, so we want to make sure our clients have a good attorney on board on day one. Both a kind of cannabis specialized attorney, but also a corporate attorney if they're raising capital. There's many Regulation D and other state regulations that you don't want to go afoul of. So we want to make sure that they are well informed. That said, you can still, even though you're not the attorney and you're not, at the end of the day, you want the attorney to give the full legal advice, you can still have input and advice around what you know or don't know around raising capital. So there's three types of structures most people use for raising capital. One is direct equity. You form a C corp or an LLC and you sell shares in the C corp or interest in the LLC to an investor. Like you sell 10% for $500,000 of the company. I'd say that's fairly common. I've seen a fair amount of that in this industry. Another method is called SAFE, which is a simple agreement for future equity. Y Combinator in Silicon Valley introduced these, and they are available. This is in the cheat sheet. We'll pop in here. Those are not super common. They're very heavily favored towards the founders, not the investors. And the most common you'll see in all kinds of startups are convertible notes. And these are basically loan with an interest rate that later can convert to equity based on valuing the company at a later date. Valuation is very tricky up front on a startup, basically because nobody knows how good or bad it's going to be. And so to say, we've got a new cannabis farm and we think it's worth $5 million on day one, that's just fiction. Nobody knows that. So convertible notes can work really well. Just at least have a little bit of knowledge around what those are so that you can at least give input. Another issue on the entity structure with an LLC versus C Corp, there's many advantages nowadays, particularly to C Corps. whether it's asset protection, even on the tax minimization side. So make sure the attorneys aren't just writing off C Corps. Additionally, you have many investors in this space who are investing, say, 10% of the company or 15%. So they're a minority investor. They're not a majority. They have no control. So with a C Corp, if the IRS shows up, which they likely will, if they're a C Corp, that investor is at least safe as from an audit perspective. So the IRS would have to limit their audit to the C Corp and that entity. If it's an LLC, the IRS can say, oh, investor A, wow, he's worth $1 billion. Why don't we go invest his personal tax returns? They can do that on the LLC side. So most investors don't want that to happen. So make them aware that can happen. An attorney may not mention that, so mention it to them. Another risk to an investor, a minority investor, I dealt with this personally. A guy who had a lot of money invested 33% of a dispensary in Portland, and that typical many dispensaries net income, um, true net income was zero, and so they're making money, spending money. There was nothing left over to make distributions. But that said, every single year, since because of 280E, there was a very large taxable income. So since that flows through on K1, this investor was getting hit with taxable income every year and no money to pay that tax. He was not happy at all, and he had a very big struggle to get out of that investment. And so that is a huge risk. If you have a C Corp, the tax is paid at the corporate level, the investor is safe. So two big issues to think about right there. So sometimes you're thinking about, okay, helping protect the investors, which is actually good for if the business owner hires you, the CEO, you still want to be thinking about the investors or the lenders because in the long run, you're helping all owners by considering all these things. It doesn't help the owners of the company if 2 years later the investors are irate because they set this thing up wrong. So make sure you're looking at all kind of user groups as you help do this. You want to be educated. Make sure, especially on the CBD hemp side, that it's legal in all 50 states. I'm going to pop this into the comments. Make sure you read and understand the USDA rules around hemp and the FDA rules and FAQs around CBD. So make sure that, thank you, Samuel. Here's the FDA regulations. Many people are selling CBD in food and beverages illegally. So the regulations, they're behind as they always are. They're slow and underfunded. They will catch up. So make sure your clients are doing things right. My contention is the people that do things right and legally are going to be better in the long run. They're going to have a higher entity valuation than those that are like, oh, well, FDA's just behind. I can do this, whatever, illegally. In the meantime, that's not the best advice. So make sure you're up to date on all those laws and regulations. You also want to understand the tax codes. And so again, let's just go back to how we like to do accounting in Dope CFO because we think it has more value to the management team, the business owners, the investors, the board, the lenders, all user groups. So first and foremost, we want the books to be on as close to GAAP accrual accounting as possible for many reasons. You can better manage the company. It's easier to raise capital. It's easier to serve loans. It's also definitely easier to have a good exit. So we always keep the books on the GAAP accounting accrual basis. It may not be perfectly GAAP. These are smaller companies, but do the best you can accrual accounting. Once a year, we will do a tax return. So the tax software off the books, we never make tax journal entries on our books. The tax preparer can keep those journal entries. So say they're making a journal entry around depreciation or whatever it is, they can do that on the tax side. So again, if we do GAAP accrual cost accounting for cannabis, CBD, hemp right, those clients will be perfectly set up to do 471, which is the tax code that's going to affect the farms and manufacturers for both cannabis and CBD hemp, for everybody. Now, if you have CBD hemp, since it's off Schedule 1, they're going to have more tax codes available. So after you go through 471, they're going to have the tax preparer, not the day-to-day accountant, the tax preparer will have to consider 263A, 199A, which gets very complex. Again, even if you're not a tax preparer, you're not an attorney, you can still give input to the conversation when everyone's around the table at startup saying, wait a minute, investor B, you might want to think about 199A versus maybe some C Corp benefits. Maybe investor A has a totally different 199A situation than investor B, and you can bring those issues up just so they can at least be investigated, even if you don't have the knowledge to completely do a 199A calculation. You can at least bring it up so the tax CPA preparer or whoever can do that. So that's super important. And we also have farm accounting applying to CBD hemp. So that will go on even broader. And then finally, you'll look at state level tax returns, which is if you're not the tax preparer, you'll need to get help in that space because each state is definitely different. But just having as much knowledge as you can. Now let's flip over also pricing and marketing your own services. You want to be super careful. Many of these companies, when you launch a manufacturer or a farm, they may be pre-revenue for years. So be super careful about how you get paid. We always say, we want to get paid up front every month before we do the work. Then we'll do the work, then we get paid the next month. We use that retainer model. Don't let them get behind because I've seen this in person when I watched a farm go under very, very slowly. And when they have bills to pay labor and water and electricity and they need ladders or tractors or trimmers, those people get paid first. The very first people they're going to quit paying their bills to are the attorneys and accountants. So make sure you're not fall into that category. Make sure you get paid. Again, you want clients that are well capitalized because the bills are very, very high for a long time in this industry. Some people ask about accepting equity. I'm okay with that, and I've actually done very, very well over my career getting equity. And so if I look back over 25 years, I have gotten equity many times, and I have had 7-figure payouts more than once. I've had 6-figure payouts, and I've had big fat zeros many of times. And so just be careful. I suggest and I do the same, if I was going to take equity now, that supplements cash paid to me every month, doesn't replace it. I'm going to make sure I get cash every month. And yeah, if I add value to the company and I get some upside equity, that is okay as well. Let me see what else I want to hit. You need to have the tools to help. So this is another good point. I've been actually talking about how there's 50,000 companies in the U.S. CBD cannabis hemp. I recently saw, I can't believe it was on Forbes or CNN somewhere. There's currently around 110,000 companies in the U.S. right now. This number is growing rapidly after this election cycle. We are likely going to see hundreds of thousands of new companies over the next 2 or 3 years. So the last 5 years maybe got us to 100,000 companies. The next 2 or 3 years are probably going to triple that number. So we're going to have massive capital come into the space. We're going to have massive new startups. So if you're an accountant coming into the space, good news for you. If you're an accountant in our Dope CFO program, really good news for you because you do have the knowledge, tools, skills, etc., to serve this industry. So as I advise new startups or you advise new startups, they're going to need things. They're going to need a financial model in Excel. They're going to need a pitch deck and tools. They're going to need a capitalization table. They're going to need a table of sources and uses of funds. They're going to need these tools. They're going to need, the link that we just put in here. What goes in a good pitch deck? They're going to need that. I've written out exactly what you should have in a good pitch deck. Make sure you have all these things. If you're missing some of these things, and I review decks all the time, even outside of cannabis, because I'm in a hotbed startup community, make sure nothing's missing. If things are missing, that will just decrease their chances of raising capital. If you have input into the startup financial model, make sure the business owner is stating, and you state in the model, these are assumptions from the owner, not you, the accountant, and make them make those projections on production and pricing and all that stuff so that they take ownership of it. And you just make sure the math is done correctly. The But at the same time, make sure it's not unreasonable, their assumptions. We talked about having an attorney on board. Also, one benefit to us of startups, we get to make sure the accounting's done right from day one. So if we have the correct chart of accounts that are tailored to cannabis, we have internal controls docs tailored to cannabis, we have PBC lists, engagement letter, we have all those things already set up, ready to go. We can really add value. Again, those are all things we have in our program as well. We'll make sure we don't got any more questions here. So this is everything I will cover. Take a look at our checklist as well. That can help them. But number one, first and foremost, whether you're serving startups or existing companies, make sure you have knowledge, tools, skills, resources, experts to ask, things that we have in our Dope CFO program, and you can reach out to us anytime as well. All right. Well, thank you everyone for joining, and I will see you all next week. We're going to do our roundup of the news cycle, and there is lots of news, and we're coming into the election, so there's going to be even lots more of news. So we'll look at that next live. Thanks everyone for joining.